Hey everyone, welcome back to the channel. I know it's really been a long time since my last video, but today I have a great video lined up for you. We are going to discuss an asymmetrical bet on Uber. And if you are a fan of the channel, we'll go through our usual fundamental analysis, we'll go over the earnings projections, we'll go over the fair value, then we'll jump straight into the technicals. We'll see how the fair value matches up with the current price point, what are some technical indicators that we should look into, and at the end, where should we make an entry in Uber, or is it a right time to enter Uber or not? So if you enjoyed today's video, make sure to give us a like, share it with your friends and family, and without further ado, let's dive in. Before I share with you all the details about Uber and why it's going to be an asymmetrical bet, let's understand what an asymmetrical bet is. An asymmetrical bet simply means a situation where the potential reward outweighs the potential risk, which means that the upside is much higher than the downside risk. So that is what we call an asymmetrical bet. And in investing and trading, generally you get higher returns when you apply the asymmetrical bets. Now here is an example of an asymmetrical bet. I bought Lululemon at $263, and as of this recording on December 11th, I am up 50.59%. We bought this on August 30th, 2024, and let me show you how we did it. This is the weekly chart of Lululemon, and Lululemon was trading at $517.54 at the start of 2024. So around 12.29 and 1.5, we were at the all-time high for Lululemon. When we switched to the daily chart, right around this time frame, which was around the 321, we saw this major gap down on Lululemon, and this major gap down pretty much continued throughout the rest of the year until we hit an absolute bottom around 8.5, and then we saw an uptrend. Now why did that happen? Well, that happened because of the earnings. The first earnings that came out in January of 2024, which was for the January quarter, it came out on March 21, and you can see right here, this is March 21, is where we had this gap down. What happened? They beat on top line, they beat on bottom line, but the problem was they fall after full year guidance lands short of expectation. So yes, you can beat the top line, you can beat the bottom line, but if the guidance is poor, that's where the market kind of spooks out and the stock falls. Next quarter comes for April, which was reported in June. They again beat the top line and bottom line, and they did say that they are hiking profit guidance, which was a little bit above the street view, which was right around this time frame. You saw the stock was trading at around 306, and it gapped up to 337 after that news. But that news was not enough to sustain the momentum, and we continued to see a downtrend. Coming back to the previous quarter, which was reported on August 29th, they lowered the financial year 24 guidance, which led to the further decline of the stock, and they also missed on the revenue. So after hitting the all-time low of 223, at this time the stock was already down 55.81%. This is where the valuation comes into the picture. The market cap was slashed in half. During this time, the big money continued to invest in Lululemon, and you can see that there were a couple volume shelves where a lot of stocks were being added. So the first volume shelf was sitting around 290 to 315 was the first big volume shelf where people were adding, and then this was another volume shelf between 253 and 263 because the stock was already 50% off. And when we saw the stock getting consolidated at this level, we started seeing an uptrend in the stock. And with the most recent report of Lululemon, they not only just beat the top line and bottom line, they also increased the financial year 24 guidance, and which led to this gap up where the stock is currently trading at a little bit over $400. Going back to the asymmetrical bet example, we bought the stock around the 263 where we started seeing a lot of consolidation happening. Because the stock was undervalued, we saw an opportunity in the increment, and that is where we call asymmetrical bet. So at the current point in time, the stock is trading around 397, which is the fair value. Anything under 321 was undervalued for the stock, so it was no brainer to buy into this brand. So now if you understand what an asymmetrical bet is, let's get into the Uber example. Uber Technologies, ticker symbol UBER, currently is trading at 61.61 at the time of this recording. We are very close to the 52-week low, and year to date the stock has returned. It's been pretty much flat line. I'm assuming that you know what Uber is, but just in case you don't know, Uber was founded in 2009. And the founder of Uber no longer works in the company. There was a lot of controversy and he was ousted by the board of directors. Having said that, the company operates in three major segments: mobility, delivery, and freight. So the mobility segment offers a range of transportation options like ride sharing, car sharing, micromobility, rentals, and public transits in 70 countries globally, excluding China and Southeast Asia, where you have Didi and Grab and some of those other very popular ride sharing car companies. The Uber's delivery segment allows users to discover and order from a variety of local merchants. So if you have Uber Eats, you can order food from restaurants. Either you can go pick it up or you can get it delivered to your home. That is also available in many markets around the world. And lastly, they are into the freight segment, which manages logistics networks connecting shippers and carriers in digital marketplace. The main competitor for car sharing or ride sharing or a taxi service in United States is Lyft. And when it comes to Southeast Asia and China, you have companies like Didi, and in the delivery segment, you have somebody like DoorDash competing, which also delivers food. Now, one of the main reasons I like Uber is because the short interest is only 2.76%. And with a market of $136 billion, this company generates close to $11 billion every single quarter. So for the year, this company is generating $44 billion in a single year with a market cap of basically being $140 billion, give or take. Strong companies like Apple, Microsoft, Facebook, or Meta, they pretty much always hit the top line and the bottom line. They're always a beat. Hardly there is a miss. That's not the case with Uber. We do see misses all across, whether in the top line or bottom line, we have seen misses. But from a financial standpoint, the revenue has been increasing for Uber since 2022. This company was bringing a revenue of $6.8 billion in 2022 March, and in September 2024, this company has brought in $11.1 billion in revenue. And operating income is very, very important because yes, you are bringing revenue, but what is the cost of goods sold? That has to be subtracted from operating income. This company was having negative operating income till March of 2023, and only from June 2023, we started seeing positive operating income, which again is a good sign because we have also seen the revenue increase and they have been able to flatline their expenses as much as they can. And ultimately that shows in their net income, which most recent quarter they brought in $2.6 billion in net income, which was up more than double since the previous quarter. From a balance sheet standpoint, it is important to know what is the current asset versus liability and long-term asset versus liability. They have $15.3 billion in their current asset against the current liability of only $10.8 billion. So that is in green. Similarly, in the total assets for long-term, they have $47.1 billion, whereas the total liability for long-term is only $30.57. So from an asset and liability standpoint, they are in green. Now, another metric I like to look at is the cash from operations. And overall, this is also growing for Uber across quarter by quarter. We were in negative of minus 244 million in December 2022, but by the time we are in 2024, we are in net positive of $2.1 billion. So from a fundamental standpoint, this company has very solid financial statements. What would be the fair value that you want to pay for this stock for future earnings? If from a valuation standpoint, the PE ratio, and which most people like to look at, the forward PE ratio is 23.14, whereas the sector median is 21.24. Coming back to the earnings potential, December 2025, 2026, and 2027, we will be growing at mid to high teens in the next 3 years. And then from 2027 onwards, we will be in the low teens. If you go to Simply Wall Street, it's a free website. You can definitely take a look at it. The share price versus fair value of Uber right now is they are 58% undervalued. Their fair value says 154.82. They are trading at 64.96. Now, let's jump into the technical and see, does this reflect reality or is the stock market crazy? As per Simply Wall Street, the fair value of this stock is $154 or so. Right now, the stock is trading at 61.52 at the time of this recording. So we are currently down 141% from the fair value of this stock. And on the flip side, the stock has been lowest to about $14, a down of around 80%. So we have 141% upside potential versus a 78.6 downside risk. The 78% downside is not a reality, and the reason is because this company has an institutional ownership of 83% with almost 99.75% float with only 2% of short interest. So Wall Street smart money does not think the stock is going to go down 80% from here onwards. On the weekly chart, we are having a double top for this particular stock, which showcases that there is a trend reversal. So the stock was running up, we get this double top, and the stock is now trending downwards. Let's switch to the daily. We currently have a decent volume shelf going from 59.43 all the way to 61.39. So 59 to 61 could be a good point of adding this stock into your portfolio. And if it continues to decline further, if it breaks this volume shelf, we could see stock having support level around the 42 mark, which is a downside of another 30%. Is this a good time to add the stock into the portfolio? Well, what we want to see is we did get bounce from this level of 62.53. Couple times here, we did see it break down for a couple days and then come back up. We may see a similar breakdown right here as we are seeing as the market is currently in progress. But the good news is that there is a lot more buying pressure that comes in around the 59.48. So we can consider $60 as a good entry point for the stock, considering the potential is 156. Generally, when we are adding a new position or building on an existing position, I prefer opening a cash secured put to hedge my downside risk and expand my upside potential. For a stock like this, you can look at about a 23-day out or even a 30-day out expiration. And if we are targeting a $60, which would be for 3rd January, would be a 36 delta with a decent open interest of 1484, you will get about 132. So let's say your cost basis will be $58.70 or 68 cents. So you are having a little bit more downside protection. Of course, if you go further out to 30 days, you will get a little bit more. You'll get 140. Before we add this into the position, I would watch the market at least for a couple more days. Now, the goal is for asymmetrical bets is generally to take advantage of the upside capital appreciation and then sell covered calls at the top so that anything further above the fair value is covered via covered call premium. So that is what I am going to be doing, especially for 2025 as the company gets stronger in all the 3 segments where they operate. That is the asymmetrical bet that I think will play out for Uber. And let me know in the comments, what do you think about this particular bet? Do you think Uber has a good position to go to that fair value of $154, or do you see that we will see further declines in Uber going down to maybe the 20s and 30s or 40s? And how are you looking at Uber? Are you trading in 2025? Are you investing in Uber or not? Love to know all that in the comments. If you enjoyed today's video, make sure to give us a like, click on subscribe and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.